Earnings just in from Pfizer. There's another one. We're watching the shares of Moderna.
Huge quarter for Novo Nordisk, biggest company here in Europe, but the stock's actually down.
And I met with Bob Bradway at the beginning of the year. He said, look out, we've got something that might be better.
Are these 5 pharma biotech stocks set to outperform? Q1 earnings estimates? We're right in the thick of the first quarter 2024 earnings season for the medical sector, which includes heavyweight players from pharma, biotech, and medical device domains. So far, it's been a bit of a mixed bag. While many of the big names in pharma and biotech have surpassed bottom-line forecasts, some have fallen short on the revenue front. Just last week, AbbVie and AstraZeneca impressed with their Q1 results, outpacing both earnings and sales projections. AstraZeneca saw a surge in demand for its key oncology and rare disease drugs, driving its revenue growth, while AbbVie's sales were bolstered by strong demand for its immunology and oncology offerings. According to the latest earnings trends report as of April 24th, about 16.7% of medical sector companies, representing roughly 32.6% of the sector's market cap, have reported their quarterly earnings. While all of them managed to beat earnings estimates, only 70% exceeded revenue expectations. Compared to the previous year, earnings inched up by 0.7%, and revenues saw a healthier 3.6% increase. Overall, Q1 earnings for the medical sector are projected to dip by 7.6%, though sales are anticipated to climb by 6.3% year over year. Pfizer is gearing up to unveil its first quarter earnings before the market opens on May 1st. Following suit on May 2nd, Moderna, Novo Nordisk, and Regeneron Pharmaceuticals are slated to release their Q1 earnings reports in the morning, while Amgen will follow suit with its quarterly results after the market closes on the same day. Let's delve into what these pharmaceutical and biotech giants might have in store for investors with their upcoming quarterly reports. Starting with Pfizer, the company has a solid track record when it comes to earnings. It has surpassed earnings expectations in each of the last 4 quarters, with an average earnings surprise of 60.54%. In the previous quarter, Pfizer exceeded earnings estimates by a significant margin of 152.63%. Pfizer Incorporated, price and EPS surprise. As for the upcoming quarter, Pfizer has an earnings ESP of -6.76%. The consensus estimate for earnings stands at 56 cents per share. While revenue from its COVID-related products is expected to dip, Pfizer anticipates an uptick in its operational revenues. This growth is fueled by established products like Vyndaqel, recent launches such as Abrysvo, and newly acquired products, including those obtained from Seagen. Moderna boasts an impressive earnings track record thus far. It has surpassed earnings expectations in each of the past 4 quarters, boasting an average earnings surprise of 79.46%. In the most recent quarter, Moderna exceeded earnings estimates by a whopping 170.51%. Moderna Incorporated, price and EPS surprise. Looking ahead to the upcoming quarter, Moderna has an earnings ESP of -6.17%. The consensus estimate for earnings sits at a loss of $3.59 per share. In the first quarter, investors will likely be keen to hear updates from Moderna regarding its commercial launch strategies for the RSV vaccine. This vaccine is anticipated to receive potential approval from the FDA next month, making it a significant point of interest for stakeholders. Novo Nordisk. Novo Nordisk's earnings track record has been a bit of a mixed bag thus far. It surpassed earnings expectations in 2 of the last 4 quarters, while falling short once and meeting expectations once. On average, the company managed to deliver an earnings surprise of 1.85%. In the most recent quarter, Novo Nordisk exceeded earnings estimates by 7.58%. Novo Nordisk AS price and EPS surprise. Looking ahead to the upcoming quarter, Novo Nordisk has an earnings ESP of -1.30%. The consensus estimate for earnings is set at 77 cents per share. In the quarter to be reported, Novo Nordisk's revenues are anticipated to have been primarily driven by sales of its diabetes and obesity care products, particularly Ozempic, Rybelsus, and Wegovy. These products have been key drivers of revenue growth for the company in recent periods. Regeneron Pharmaceuticals. Regeneron Pharmaceuticals has built up an impressive track record when it comes to earnings. It managed to surpass earnings expectations in each of the past 4 quarters, with an average earnings surprise of 8.33%. In the most recent quarter, Regeneron exceeded earnings estimates by 13.71%. Regeneron Pharmaceuticals, Inc. Price and EPS. Surprise. Looking ahead to the upcoming quarter, Regeneron has an earnings ESP of minus 1.32%. The consensus estimate for the bottom line sits at $10.14 per share. Investors are likely to be paying close attention to the performance of Regeneron's asthma drug Dupixent and the adoption of its ophthalmology drug Eylea HD when the company reports its first quarter results. Amgen also boasts an encouraging track record when it comes to earnings. It managed to outperform earnings estimates in each of the past 4 quarters, with an average earnings surprise of 6.00%. In the last reported quarter, Amgen exceeded earnings estimates by 1.07%. Amgen Inc. price and EPS. Surprise. Looking ahead to the quarter to be reported, Amgen has an earnings ESP of minus 1.47%. The consensus estimate for the bottom line stands at $3.76 per share. Amgen's product sales are expected to have been buoyed by robust volume growth of key products such as Evenity, Repatha, Prolia, and Blincyto, among others. However, lower revenues from oncology biosimilars and legacy established products are anticipated to have had a negative impact on the top line. As we approach the tail end of the ongoing reporting season in the biotech sector, things are looking rather uneventful. The heavy hitters in the industry have already unveiled their results, and it's been a mixed bag overall. However, the guidance provided by these companies is generally positive, hinting at promising prospects fueled by new drug approvals and advancements in their pipelines. Despite this optimism, there's still a degree of uncertainty lingering in the macroeconomic landscape, which could potentially dampen growth. Nevertheless, the biotech sector remains under the spotlight as pharmaceutical giants seek to strengthen their portfolios and pipelines by collaborating with or acquiring smaller firms, especially in the face of generic competition for their older drugs. With the persistent demand for innovative medical solutions, regardless of economic conditions, investing in biotech companies could prove rewarding. Despite the inherent volatility and macroeconomic unpredictability, biotech players such as BioMarin Pharmaceutical, Blueprint Medicines, Immunovant, Chimera Therapeutics, and Ligand Pharmaceuticals are positioned to outshine within this volatile sector. These drugs, which target areas like virology, neuroscience, metabolism, and rare diseases, are produced using living organisms, setting them apart as biologically processed treatments. As technology continues to play a pivotal role in advancing global healthcare, biotech firms are at the forefront, striving to develop groundbreaking treatments through innovative approaches. Many of these companies are leveraging modern technology to create vaccines, reflecting the dynamic and evolving nature of the sector, which is often perceived as riskier compared to larger pharmaceutical or drug firms. Here are 4 key trends shaping the future of the biotech industry. Innovation and execution hold the key. With only a handful of companies having approved drugs in their portfolios, the spotlight is on the performance of these high-profile drugs and the development of promising pipelines. Significant investments in research and development are required to bring these innovative treatments to market. However, the journey to profitability is often long, as modern treatments may have unforeseen side effects that emerge over time. Successful commercialization is crucial for wider adoption, prompting smaller biotechs to seek collaboration deals with larger players to reach their target markets more effectively. Mergers and acquisitions take center stage. Consolidation remains a prominent theme in the biotech industry as leading firms seek to diversify their revenue streams amidst declining sales of existing drugs. Acquisitions offer an attractive avenue to expand portfolios without the high costs and risks associated with developing treatments from scratch. The recent surge in M&A activity, driven by big pharma and biotech companies, injects additional capital into the sector and strengthens the overall biotech landscape. New drug approvals drive growth. The pace of new drug approvals has accelerated, fueled by increased R&D spending and a growing emphasis on diversification among biotech firms. This trend is expected to continue, with companies focusing on expanding their pipelines to capitalize on emerging opportunities in areas such as oncology, immuno-oncology, obesity, rare diseases, and gene editing. Pipeline setbacks and competition pose challenges. Despite the promising outlook, biotech companies face challenges such as pipeline setbacks and intensifying competition. The costly and time-consuming process of developing drugs, coupled with the uncertainty of regulatory approvals, underscores the risks inherent in the industry. Setbacks in crucial trials can have significant repercussions, particularly for smaller biotechs heavily reliant on a single promising candidate. Additionally, established biotechs grapple with declining sales of flagship drugs as competition intensifies in the market. Overall, while the biotech sector offers promising investment opportunities, investors should remain cognizant of the inherent risks and uncertainties associated with this dynamic and rapidly evolving industry.